Well, folks, 8 days ago, I put out a video on this channel called "The Stock Market is Set for an Epic Rally." And since that video, over the past 8 days, the Dow Jones Industrial Average is up about 8%. NASDAQ's up huge, Russell's up huge, S&P 500's up huge in a matter of 8 days. Now, we're going to talk about the markets. Obviously, today's another big green day out there. We'll talk about the markets, how long this epic rally is going to last for, some very important things I want to show you in today's video and things like that, okay? But first, I want to give actually a warning out there to all investors in the market, right? And I think this is very, very important that I tell everybody this, because I can see definitely a lot of folks falling into this trap over the next few months. And unfortunately, it's, people think they're going to make the right move here, and it's going to actually be a horrible financial decision. So, by the way, I hope you guys enjoy this. As always, I appreciate each and every one of you that subscribe to the channel. Thanks for always joining me every day, guys. So I put this together at the end of this past week on $10 billion plus market cap companies, right? And obviously, it's been devastating. Now, from the retail side, right? Some retail investors look at this and they say, "What have I been doing, man? This is, I've been messing around. This is so stupid. Look at all these stocks that I own, right? Down 50, 60, 70, whatever, 80%, right? And they're like, what am I doing? I've lost almost, I don't want to say almost all my capital, but a huge portion of my capital, right? And because I've been messing around with all these growth stocks and all these exciting companies that obviously aren't paying off, right? And so naturally, what starts to happen on a psychological level, right? Well, I was reading this yesterday, right? And it was talking about the tech bubble and kind of what happened in the tech bubble situation, right? After suffering losses, retail investors transition their investment portfolios to more cautious positions, right? So since everybody's been destroyed on countless stocks, 50, 60, 70, 80%, right? What do you think's naturally going to happen now? Well, a ton of investors are going to say, okay, I need to transition my portfolio for 2023 over to safe companies, over to a more cautious portfolio. So what people start to look at is they start to look at Dow Jones Industrial Average stocks like the Dow 30, right? Those are usually the biggest companies. Those are usually seen as the safest of the safe companies that have been around 50 to 100 years, most of them, right? Some of them even longer than that. Those companies usually pay big, huge dividend yields, which a lot of investors start looking and they say, I want that big dividend money because I can't make any money from stocks. Look at all these stocks just go down. At least I can collect a bunch of dividend money. So they start looking at Dow stocks. They start looking at dividend stocks. And they say, I like this, okay? Here's where you get into major, major, major trouble, okay? When you see these stocks, they look appetizing, right? Oh, it's a Dow stock. It's super famous company, massive dividend yield. A stock like Verizon comes to mind, right? At a 7% plus yield. AT&T comes to mind, 6.6% dividend yield. Intel comes to mind, 5.6% dividend yield. IBM comes to mind, 5% dividend yield, right? These are all great dividend payers, massive companies, super famous, been around for as long could be, right? And so people say, these are the stocks I need to start buying. I need to transition my portfolio from all these risky growth-related names, the hot names that were hot years ago, right, and haven't been hot the past year, to these safer stocks that are going to pay these big dividends, right? But here's the problem. Pull up a 10-year chart. Here's a 10-year chart of Verizon, okay? 10-year chart of Verizon. This stock is down almost 22% in the past 10 years. So you collected a bunch of dividend money, but you also lost a bunch of money on the stock over the past 10 years. Now, this is in the past 1 year. This is the past 10 years in regards to this, okay? And there's something that's competing for this money that's very important that I want to show you in this video, okay? AT&T over the past 10 years is down nearly 40%. Nearly 40% in the past 10 years. What good is it that you made all that dividend money from AT&T over the past 10 years when the stock price is down nearly 40% in the past 10 years? What good was that, man? It didn't do you any dang good, right? Intel, right? This is the best performer of the bunch. The best performer. And this is at a 19% gain in the past 10 years. 10 flipping flapjacking years. IBM, 10 years of no bueno. This stock is down about 30, 4% in the past 10 years. Once again, what's the point of making that dividend money if you lose a massive amount of the stock price over that 10-year span, right? It's like, what were you doing? There's so many great stocks that you could have been in that performed amazing over the past 10 years, right? And many of those stocks have done horrible the past 1 year, okay, but you really want to be here? This is the stocks you want to be in, right? The problem, and it's a massive problem for all these stocks, right? The first problem that these stocks have dealt with over the past 10 years is lack of growth, right? In these companies, because they pay out such big dividend money, right? What they do is they go ahead and they throw that money to dividends, right? To shareholders rather than reinvest that money. The money doesn't magically come from somewhere. What those companies are all doing, they're taking massive portions of their profits and throwing it off to shareholders. And that's why they have these big, huge dividend yields, right? Because they're just throwing off that profit rather than usually reinvesting the money back into the business. Also, almost all those companies usually are very debt laden. They usually have massive amounts of debt, right? And they have to pay substantial amounts of interest on that debt as well. So that takes a huge portion of their money. Third, almost all of those companies are usually very bureaucratic. They don't move very fast. And it almost feels like many of those companies are just clinging on to like their past success and thinking that's going to just continue to translate forever rather than reinvesting into the next big thing and the next big thing, right? But that's all the small stuff. There's something much, much bigger going on out there right now that I don't think a lot of people are paying attention to. And so if you think these dividend stocks are going to perform amazing, there's a big issue here, okay? It is United States. The United States of America is now competing for that old dividend money. Why would I go risk money in one of those stocks that's got massive debt, right? When I could just buy a treasury, when I could just buy bonds from the government and make really good, ROI on that. And it's seen as basically risk-free, right? Well, unless the U.S. ever defaults or something like that, it doesn't pay back the money. That would be a whole situation, right? But it's basically seen as risk-free as you can possibly get. And you can collect your 4% plus now at this point in time, right? And this is what is starting to compete with a ton of those dividend stocks. And so if you're wondering why have those dividend stocks been hit so hard, which for a lot of those stocks, they've fallen like 30% over the past, 12 months, 9 months or so. And those stocks usually don't fall like that. Why have they fallen so much? Well, because the money's competing. For those folks that have a lot of money, they would usually, I need yield. What do I buy? Verizon stock. I need yield. What do I buy? AT&T stock or Intel stock or IBM or whatever, right? But now it's like, I don't need to take a risk in that. I can go collect a nice yield on, a government bond at this point in time, right? A government treasury. So that's the way people start to look at it. And so now you have real competition for those dividend stocks now at this point in time. At some point in time, maybe this won't be the situation, right? And the only game in town to get any good yield will be something like that. But yeah, things have changed massively, right? And so that's a huge risk, right? Not to mention, that's just a huge risk for those, right? Not to mention, what do we know about every single crash in the market? You need to be buying growth stocks, not selling growth stocks. And so it's very unfortunate because what we've seen for data is retail specifically has been selling stocks the past month. And that's unfortunate because I don't want to say they're selling the bottom, but usually whenever you see retail capitulating like that and selling, and when I showed you guys that Goldman Sachs chart, it was either the last video or the video before, right? I showed you that Goldman Sachs chart that retail's now selling for the past month, right? Usually whenever retail's net selling, usually you're getting, you're either at the bottom, you've already reached the bottom, or you're getting pretty darn close, right? And that's unfortunate because that usually happens every single crash. So now people giving it up on these companies, and it's like, you don't even realize, so many of these companies are going to 3x, 5x, 10x over the next 3 years. Not over the next 30 years, over the next 3 years. And you're just missing this massive opportunity that's going to be in front of yourself, right? And that's unfortunate, but it happens every single crash. And the longer you're kind of in a down cycle for the market, the more people start to only look at things as, it's worst case scenario, everything's just going to be bad, it's doomsday, just can't see anything positive. And that's very unfortunate, man. But it does play out this way every single time. So if you think you're going to run to those dividend stocks and make a bunch of money, unfortunately, it's things aren't quite lining up there, okay? Now, in regards to the market today, obviously very, very green day out there. 2% plus moves for all the indexes, the NASDAQ, the Russell, S&P 500, the Dow. Great moves. A lot of nice moves from stocks, including one very sneaky move that I want to show you guys in just a moment here. Of course, they're gaming up 5+%. JP Morgan up 5+% here today. Just a lot of good moves. Amazon 3.5% move. Tesla on the comeback, 3.5% move there. Palantir with a nice day, 3% plus there. Chef moved up, Dropbox moved up, Fubo up 1% there as far as that goes. And look at this. In the past 8 trading days, JP Morgan has made the sneakiest move I've ever probably seen in the market. This stock is up 17.7% in the past 8 trading days. In the past 8 trading days, that is insane for pretty much the premier bank in the world to move up 17.7% in 8 trading days. It's amazing. This is a stock I personally hold in my dividend account. I wish I held a lot more shares, to be quite honest. That's very telling, right? It's extremely telling. That is almost Wall Street saying, right, that we believe we're likely going to have a big rally here. Therefore, we got to position into this name going into this rally, essentially, right? That's Wall Street buying Wall Street. And for a long time, Wall Street was selling Wall Street. Basically, up until the past 8 trading days, a stock like JP Morgan just continued to get sold off again and again and again. And what did we also find simultaneously? The market continued lower, right? Now there's clearly a switch going on there, which is a little telling, in my opinion, a little telling. And when you have so many people throwing so many things at the market, including the chief executive officer of JP Morgan, Jamie Dimon's always got this to say, think about what he said. Wasn't it like 8 trading days ago that Jamie Dimon said something about, the S&P 500 could fall another easy 20%, right? He said that. I think that was about 8 trading days ago. Maybe it was 10 trading days ago. Jamie Dimon said that comment, right? You could go back and look at that. Google it. I think it was either 8 trading days ago or 10 trading days. S&P 500 could fall an easy 20%. And meanwhile, what's going on with JP Morgan stock? Up 17.7%. Almost in the same amount of time since he said that comment. That's interesting. Okay. Tesla Maestra. So the shorts got really excited, right? But here's the deal, right? If you're a short seller of Tesla Maestra, Tesla's going to do its own thing. Here's the past 5 trading days for Tesla. Stock's actually up 1%. Shorts thought they were going to make a bunch of money here, and it just hasn't been possible. They got that one big, huge downdraft, and since then the stock's been on the comeback. But here's the deal. If the market continues to rally, guess what's going to happen to Tesla stock? Tesla stock will continue to rally. If we likely continue this rally for the next, and we'll talk about how long this is going to last for, Tesla's going to continue to move up. So it's not like we rally in the market and Tesla's going to move down. That's not the way it's going to be, right? Now, the sentiment is still going to be a problem for Tesla over the next 6 to 12 months. But the thing is, if the market's in rally mode, it doesn't matter what the sentiment is around Tesla during that given period of time. The stock's just moving up. That's just as simple as that. Tesla is basically almost like a call option on the NASDAQ. If the NASDAQ's up 2%, Tesla Maestra is going to be up 3, 4, 5%. It's as simple as that. So shorts, that's kind of going on, right? Now, in regards to obviously the epic rally video and obviously the Dow making a massive move since then, and obviously the S&P and NASDAQ and Russell as well, right? A lot of people are wondering, how long is this going to last for? And here's my thoughts around how long this is going to last for, okay? First off, I think next week's going to be a crazy week. I'm expecting pretty big volatility up and down, to be honest, this upcoming week. We got big tech earnings. I think one moment it's going to look like it's the end of the world. Next moment it's going to look like it's the greatest thing ever. So next week's a complete wild card all the way basically until about Halloween day and the day after Halloween. That's going to be just craziness, okay? I'm expecting mass volatility. I wouldn't be surprised if the VIX make some moves up during the next, week and a half, okay? But I am expecting full-scale rally mode to go all throughout November and possibly into December at some point in time. I think at some point the rally could potentially fade, maybe toward the end of December, something like that. But I think we got a bit, and the way I look at it is kind of like a snowball, and it's an avalanche kind of building here, essentially, right? And where it's just going to kind of build on each other more and more. And as these fund managers underperform more and more and more, they're going to have to switch sides, right? And the money that's on the sideline is going to have to start adding, obviously, more buying pressure on. And a lot of these folks are very offsides in this market. I covered in the private group recently about $1 trillion a day going through in puts, which is just absolutely ridiculous. Massive short positions on countless of these stocks, right? And just all everything is lining up for the rally to be quite substantial going into year end. Also, from the government side, and from the Wall Street side, they want us to rally going into the end of the year. The reason being is when it comes to the average American, they look at their year-end statement when it comes to stocks, okay? This is very important. So what the government doesn't want people to see, what Wall Street also doesn't want people to see, is that the S&P 500 is down 25, 26%, like it was literally just not that long ago, right? Like, was it 8 trading days ago or whatever, 8 days ago, when the S&P 500 was down 25, 26%. Ideally, they like to maybe see S&P 500 down like 10%, maybe 14%, something like that, because that makes it look like, it's not the end of the world or something like that, right? And then maybe in early 2023 they crash the markets back down again or something like that, right? So that's just something to keep in the back of your mind, that those year-end investment reports are very important, because most people don't even pay attention to what's going on in the market during a given year unless it catches mass media attention, which the mass media has not really caught up on. The fact that the NASDAQ was down 30, almost 38% a week and a half ago. NASDAQ was down almost 38% a week and a half ago, right? And the mass media never really picked up on that. They didn't. And so until the mass media picks up on it, or until people open up their year-end investment reports, people don't really pay attention, right? And so that's ideal. Like, the government really doesn't want people to open that year-end investment report and see, they've lost a quarter of their value of their stocks. They are going to try to fight that any way possible in regards to that, right? Now, I don't know if you guys saw this. This is quite interesting. I saw this as a headline. U.S. budget deficit cut in half. Biggest decrease ever. So it sounds pretty exciting, right? Wow, we cut our budget deficit in half. That's amazing. But you still look at this, and the budget shortfall is still, massive. So it declined to a $1.3 trillion budget shortfall at this point in time from $2.7 trillion. So it's cool we made progress, right? And that's awesome. But at the same time, this is still like a $1 trillion plus deficit. So yeah, it's still not ideal. And, that is what it is. And that's going to still continue to be like that for a while, right? Now, this whole student loan forgiveness thing, right? President Joe Biden said 22 million people have registered for student loan relief applications since they opened on Monday. He says, folks, it takes less than 5 minutes. The vast majority are applying on their phones. It's easy. Okay, I don't know. That might have sounded more like Mr. Obama than Joe Biden here. But, in regards to this, right, this is a form of stimulus, and I hope everybody understands that this is a form of stimulus. More than 40 million Americans are eligible to receive student loan relief under Biden's plan, right? And so whether you agree with this, whether you disagree with it, whether you're a person that's like, man, everybody else, a ton of other developed countries have free college education. Why shouldn't we? Why should we have to pay back that? Or whether you're the person that's like, those people took out those loans, they should pay it back. I don't care what side of the aisle you kind of fall on there. The bottom line is this is a form of stimulus, and so I hope everybody understands that. And in regards to a lot of the doomsday folks and the naysayers, they don't understand that the government never runs out of these forms of different stimulus, right? If they want to cancel all student loan debt in a year or 2 or 3 years, they'll do it. If they want to start giving out permanent checks to folks, like kind of the Andrew Yang, his whole program about, $1,000 checks to people constantly and things like that, like they'll do it. So I just think it's important, because people get very caught off sides and they're like, oh, the Fed's not helping us out right now. And I'm like, eventually, as soon as inflation gets to relatively normal numbers, the Fed can do whatever they want again, right? And in the meantime, the government's going to do whatever they want. So, that just is what it is. And I don't think sometimes that hits people or registers with a lot of the doomsday people, but that's just the way it is in regards to that, right? Now, the other important thing to remember, here's the latest numbers out of the AI investor sentiment. the market's still incredibly bearish, so we have a long way to go in terms of getting these bears over to the bullish side. Still 56+% are bearish on the stock market over the next 6 months. A lot of progress to be made there, okay? Hope you guys enjoyed today's video. As always, if you're looking to join my private stock group, get access to all the private Discord chats, including the private Tesla Discord chat, Palantir, AMD, all the other Discord chats. Definitely check out the pinned comment down there, and you also get access to all my course curriculums and things like that as well. Much love, and have a great day.